This is the Daily Market Comment by Rafi Boyadjian. I'm Maria Pachardis. Thanks for joining us at XM.com. The U.S. dollar fought back on Thursday to retain its reign over FX markets, which has come under threat over the past week, as rising optimism about the global economy recovering from the pandemic has revived risk assets. The dollar index edged up by about 0.25% at the start of European trading, as major stock indices turned red following a mixed session in Asia. U.S. stock futures were also pointing to losses on Wall Street today. However, there's little to suggest that the setback is anything more than some long overdue profit-taking following an unstoppable rally since mid-May. The Nasdaq 100 is flirting with record territory, while the S&P 500 just broke the 3,100 barrier for the first time since March, even as millions of Americans are still out of work. But there is growing evidence that the tide is turning. The private employment survey by ADP yesterday showed far fewer Americans lost their jobs in May than expected, signaling Friday's official jobs report will be similarly positive. Add to that the flurry of fiscal stimulus announcement in recent days, most recently by Germany and Australia, it shouldn't come as too much of a surprise why investors are increasingly bullish about the outlook. The European Central Bank is expected to announce an increase in its pandemic emergency purchase program later today. The euro, which has just reclaimed the $1.12 level, is likely to benefit from additional stimulus, as this would further boost the brightening outlook for the Eurozone economy. However, there is a risk that the ECB may deliver something less than the 500 billion euros being anticipated, or that policymakers might put off their decision until after the European Union has reached a deal on a virus rescue fund. Oil prices headed lower on Thursday, pulling away from three-month highs, as doubts emerged about whether or not OPEC and its allies will be able to reach a deal on extending the steep output cuts. A Reuters report suggests Saudi Arabia and Russia have agreed to extend the deal by 1 month into July. However, the agreement is conditional on other members of the OPEC Plus pact to abide fully with their production targets. This was today's Daily Market Comment. Thanks for joining us at XM.com.